All right, still screening for higher dividend paying stocks. So I've been looking. I saw Kraft Heinz this week in the 4.5% range. I looked at Altria, that's close to 8%. I like them. Looking for large companies, reliable businesses with stable cash flows. Just for low risk investing when I'm looking for dividends. So I want obviously something that helps bring some new cash into the account with the dividends quarterly dropping in to the account. That's cash you didn't have to put in, or I didn't have to put in myself from working or anything else. So I'm looking for that and help really for some momentum in the long run when you've had your money going into the accounts for 10, 20, 30 years and you've had dividends that are adding into the account too. So now you're getting like two contributions into these, whether retirement accounts or regular brokerage accounts. It's like two people putting savings away all of a sudden. So that's the goal, and I want ideally to get as close to 10% on the dividends as possible, with a blended kind of few stocks that might be able to do that, and that's the target. You know, that's quite high without getting too risky, really. But so starting off here, what am I looking for? I'm always looking U.S. companies only. Not going to explain, just U.S. public companies, no foreign, no ADRs. It has to be a U.S. company. So I'm starting country, USA, and then generally I'm looking for large cap, so above, well, really, I mean, a pretty big serious size company is anything in the billions. So anything above $10 billion is a pretty large company. As far as market cap wise, they break it down. FinViz calls small caps 300 million to 2 billion. Mid caps are 2 billion to 10 billion. So I like staying in that maybe mid and above range. When you get into the hundreds of millions of dollars of market cap companies, these are small companies. It's just a different type of investing. Stick with the big companies as far as like when you, especially in beginning, unless you're really studying some smaller company, some $200-300 million company, and there's a reason or something. But I keep those allocations smaller purely for the risk. I mean, a bigger company is safer. That's just the way it is. So let's say 2 billion to 10 billion. Actually, I'm not even going to sort that right now. I'm going to just leave it on any, and then I'm going to just sort by market cap here. So give me the big ones, and then we're on USA only. And then I like to find ones, so obviously we're looking for dividends. So let's start with just anything over 8% right now. So boom, automatically everything sorted here is now in order of market cap by that. And then I'm looking for, if we change this, so we got PEs, we have the dividends sitting here, so we can kind of sort and look for, wow, you know, Carl Icahn's company, IEP, Icahn Enterprises. Yeah, they pay a high dividend. I have them in one of my portfolios. Tougher company to maybe hold on to. That's a really different case in general. But what do we like that's in the 8, 9, 10 from a large company that is definitely profitable? So I'm looking for, obviously they have to be an actually profitable company. If you're paying a dividend, it's coming from profits. So health of the company is important. Longevity, stability of the product lines or whatever they do, you know, these are important as far as that dividend being counted on. Like, that's what I want. I want to find a stock. I want to buy this thing. I'm going to leave it for 3, 5, 7, 10 years somewhere where they're just like whatever valuations I find today, if I like the price multiples for what I'm paying on the earnings and for the dividend that it's yielding and everything, and I feel like that could sit for 5 to 10 years, that's really where I look for. That's the horizon. It might change in, like, if the company does something or there's markets or there's other opportunities in the next 1 or 2 years. But that's what I'm looking for the most. I want something that I know I can really, like, forget about it. Coca-Cola. Just buy some shares, 2-3 years later you've forgotten about it. People keep buying and drinking Coke. Well-distributed product across the entire planet. So that's where I like to be, to just leave that set and forget type of stuff. It's not, I don't have to wake up one day and worry if Coca-Cola is getting pulled off the shelves. So that's the methodology there on what I'm screening for. And sectors would be kind of maybe the next thing I'm going to eliminate. So when I'm looking for dividends, I don't want anything to do with banks. I don't want any bank stocks. I don't want any financials. I could explain that in a different video one day, but just buy companies that offer a real product and service that customers, people genuinely like and purchase, and you're looking for where in 10 years you're sure there's going to be very little deviation from people's purchasing or consumption habits for whatever that type of product or company is. So Coca-Cola, Procter & Gamble, these are names I bring up a lot. I just been hearing them my whole life from my dad. So, you know, toothbrushes, toothpaste, all the toiletries aisle in Target and things like that. That's Procter & Gamble's whole section. So they got all the personal care products. That's like a big envelope of all these different brands that you get to hold just with P&G. And so that's the type of solid type of company. That's what we're looking for in terms of dividend payers that we know we can leave in like the retirement account, that we're not going to really check back or move this for another couple of years. So one I've liked in the real estate for a while, I see it popped up here, is Annaly Capital Management. That's a REIT. Again, not gonna deal with financials and real estate even, or REITs right now when I'm screening. But if I were gonna look that safety play, that's a certain few sectors. So it's not going to be technology. I already said I don't like financials either, so staying away from the bank stocks. Utilities, like, and boring stuff, like that's what pays. Like when you play Monopoly, you want to own those railroads, ideally all four. Those things just pay the whole game. You buy them one time and literally you just keep collecting. It's very boring. You don't get to max out. With hotels, you can't get more from them and squeeze, you know, like the investment for a whole lot more like in some others. But boring is safe and reliable, and that's what we're looking for in this terms. We're looking for basically the railroad monopoly pieces in terms of stock. And where I find that's going to be is in the consumer product companies, so consumer defensive sector, and utilities. And then I kind of like energy. It depends. Depends a lot on how oil and things are going, but you know, energy is humongous. It's going to be you know, there are companies that are surely able to keep paying reliable dividends in that sector. So I like that, and I like the consumer consumer defensive. So I'm going to hit consumer defensive there. And the only one that comes up is BGS. B&G Foods, packaged foods. So they're a $600 million company paying an 8.5 dividend. Just right off the bat, just too small. Don't care. They're the only one that came up. That kind of tells me that my screening is just a little too, I'm too refined. So for consumer defensives. So I'm going to put it to utilities. And now I've got 3 that come up, and they're all in the $3 billion range as far as companies. They're paying 9, almost 10, and almost 14%. So this is where I would start looking into, like, why are they down? What's that dividend like? Is it at risk? You know, paying $3.61 per share dividend on a $25 per share stock. So you buy one share for $25.94, and you're getting $3.61 in cash dividend that year for every share. So you buy 10 shares, it costs you $250, and you start getting $30. That's 61 cents. Right? So that's what I'm looking at right now, and I'm gonna keep looking into some of the energy areas and just looking for where's some nice safe spots. Usually I don't find names that I haven't heard of. I don't like discovering some company on the screener and, you know, just kind of quickly looking at what they do and then throwing money at them. if I like the multiples on something like AT&T, I have no problem like buying that day if that satisfies what I was looking to make a move with. Unknown companies that are small or you just haven't heard of before, that's where I'd be like that. I'm way more careful about new companies in that sense, or unknowns or non-big players is the big thing. So that's easy as far as when you hear just companies or tips or people talking in general about anything. Be wary of like what you hear from just general chatter of people. If you've never heard of a company before and it's being told as an investment, it's like I almost never care to go down those rabbit holes. Like, I'm doing my own research. I know what I'm looking for. Everyone else has ideas for their own ways that, some stock can move or go up or whatever their ideas are. But I like to do my own just research and stay calm and relaxed and long-term horizon on a lot of this stuff. Not a lot of trades in especially the retirement type accounts per year. Like, really just looking to put money in the right spots and play the long game and be right over time. So that's it for today, and I'll talk to you later.